So, order flow. This is a hotly debated topic. You know, some people say order flow is dead. It doesn't work anymore because the algos or all those kind of things. That's not entirely true, or not remotely true, I should say. An up bar isn't just there, right? A bar opens and it closes higher, right? It's an up bar. There was a certain dynamic that unfolded, and it may be clear, it may be unclear, but there's a couple different ways that that up bar could have developed. And we're going to talk more about that. We're going to look inside the bar, right? That's what order flow is. Really, you know, time and sales data. What is that? One trade happens. There's a couple pieces of information attached to it. How many contracts were traded, aka what was the volume? What time did it occur at? And was that transaction into the offer, or was it those 5 contracts or whatever it was it into the bid? What was the volume? Was it into the bid or the ask? And at what time did it occur, right? That's price, time, and volume. You know, those are the data points that we have for trading. And this is order flow is just a very granular look at how it all comes to be and what are the dynamics, the ways in which bars form, right? We know things go higher or lower, but what were the underlying forces during a bar, during a rotation? Remember that single up bar, right? It could be normal, where I would think the bar looks like this, right? It's an up bar. You could have just a normal bit of buying pressure, which caused the market to go higher there. You could have a lack of participation, which would be very perhaps light volume. There could be a large buyer who is not actually reaching across and lifting offers, but simply on the bid, and then maybe the offer goes higher and the bid steps up a tick higher, and then the bid steps up a tick higher. There could be a lack of participation with just a large bid kind of, you know, being here, and then it goes to here, and then it goes to here, right? As this bar goes higher, but there wasn't necessarily transactions occurring along the way. It could be really, really strong buying, right? Someone really quickly, aggressively just, you know, there's 300 on the offer here, there's 400 on the offer here, there's 200 on the offer here, and someone says, I want to buy 900 contracts at the market right now, right? Strong buying, really just wiping out offers. There could be too much, question mark, buying. Too much buying. Okay, so for a particular sized up bar, I know we don't have any relativity here, but for normal rhythm and volatility and things like that, you gain a sense of relativity with bar size, what's big, what's small, things like that. And so if there's a ton of buying, that is, there were thousands and thousands of contracts bought, and maybe, you know, a recent bar looked like this for an up bar, and it only took 400 contracts to buy to make it go that high. And this was 4,000 contracts, and it only went this high. That's one of the ways that this bar could occur. And then there could actually be selling, and that's kind of this same scenario here, except there's people transacting. So, you know, this is like a dome, okay? And you have all the people willing to buy at these various bids, right? And you have all the people willing to sell at these various prices for offers. And so in this same example here, there's a really, oh no, I'm sorry. It was this example where there was a really large, no, it wasn't. I don't know which example it was before. That doesn't matter. What we're going to say here is there's a really large bid right here. And you've got some sellers who say, okay, I want to sell into that. Fine. But this bid is so large. In fact, they're kind of like, they're working a bid, but they're aggressive. They want to get fills. So they could actually, maybe if there's no more people willing to buy here and all these guys are done, and then the best offer is up here, this large bid goes here. I think I had it right in the first place. The large bid steps up, and then there's some people who sell into that. So you have a passive buyer, but you have aggressive sellers who are hitting that bid, and it keeps stepping up and it keeps stepping up, and people keep selling into it and selling into it, but it keeps coming higher and it keeps getting even bigger, maybe, right? You could have an up bar, which formed over this 5-minute period of that dynamic occurring, where there was actually selling during the up bar. Net aggressive selling. For every buyer, there's a seller, right? Like whenever I'm not saying that there's only selling occurring because there's a passive buyer. But the way I read order flow and the way I'm going to show you guys to read order flow, we focus on looking at the aggressive behavior. Where there's aggressive behavior and perhaps a lack of movement, when we talked about too much buying, well, that's going to show us that there's a strong passive participant. But we look, what is aggressiveness? There's bids and there's offers. A buyer is aggressive when they say, I'm tired of sitting here waiting to get filled. I'm going to go pay what you want, and I'm going to buy it there. That's an aggressive action. And remember, time and sales data, that would show us however many contracts. When that person got tired of waiting, they went and got aggressive and lifted the offer for 27 contracts. That is going to show as 27 contracts at the offer at 9:37 and 15 seconds a.m., right? That's the data we're dealing with here. For a full by-the-book classical nadro type trader, order flow is low man on the totem pole. It is the least prioritized tool. But that doesn't mean that we can't use it and find it useful in areas and whatnot. Far from it. But it's important to note that we always have to keep order flow in its place. It's NADR and then finally O. And that's kind of a top-down approach, and that's kind of a hierarchy of importance. So we have to use it where it's appropriate. It's our lowest time. Remember the randomness, even when it comes to a yearly and quarterly and monthly and composite structure confluent narrative. How many people do you think are positioned for that and looking at that and identifying that? A lot. But when we identify something on order flow, and how much energy do you think for the higher time frame narrative does it take to change that narrative? It's massive. We're talking about thousands and thousands and thousands of people and firms and organizations making decisions to change that course of events. But when it comes to an order flow read, like doesn't take but maybe one large player or something like that to change that read. So it's very fickle. It's very here than there and things like that. It has to be kept in its place. Do not stare at order flow all day thinking you're going to just be in tune and on the most granular level with what's going on in the market, because really you're just going to get whipsawed and head faked, and you're going to start to get too far into that, world, which is more and more and more random the shorter time frame you go, right? Don't try and decipher that. This is the number one kind of mistake is just thinking that any little blip here or there. I get questions all the time. Well, Merritt, what did you think about this divergence in order flow here or there? And I'm like, it's inconsequential. Order flow had flatlined. Price was fluttering around in the middle of DVA. There was no narrative to lean on. Why do I care what order flow was telling me there, right? Use it in the right place. Use it where it's appropriate. Don't try and decipher every single tick of order flow. So that's what not to do. What are we going to be able to do? How are we going to use it? We're going to identify strength and weakness. We're going to see what the contextual order flow picture is. So there's almost like a short-term order flow picture and then a contextual order flow picture. We're going to see if there are clues, tiebreakers, right? If we're a little bit on the fence with some decisions, order flow can be a really nice tiebreaker. Yes, we as the order flow think it's a great idea. You should go for it. Or, you're kind of indecisive about this entry. You could kind of take it or leave it. Order flow says it's a terrible idea. Hey, let's pass on it. It's a great tiebreaker. And as we mentioned, we can identify not only aggressive behavior, which is what we'll look for most of the time, or lack thereof, but sometimes that it shows us where there's actually passive participants dominating a market. And I don't know where to insert this caveat, but here's as good of a place as any. Order flow has been off the past month and a half, not consistently, not every day, but there was especially in early September. In fact, I think it's gotten better as of late, but I can tell you that during early September and at a couple points during this year, order flow is absolutely berserk by the way I'm going to teach it to you, by my standards, by my decades just over a decade of watching short-term price action and order flow. So I've said this, you guys have probably heard me say it. Order flow could die, right? And there's a large number of would-be, could-be, used-to-be good traders out there who didn't adapt and they didn't evolve as markets evolved and things like that. So I'm never going to sit here and tell you guys order flow, this is how it works and this is how it will always work, because markets change, market participants change, dynamics change. Even the laws of market dynamics, those can evolve and change over time. I think they're pretty robust. I think they speak to a lot of, auction processes and things like that. So they're most likely going to hold up pretty well. But order flow is something that, it's some pretty specific ways we use it, and it's kind of just my take on what I've observed over the years and what works and what helps me identify even better opportunities than narrative alone. But it can change over time. So we have to admit that. We have to acknowledge that. We don't, I don't mean to scare everyone away from order flow right now, because by all means, it's still fine. But we got a bit of a scare recently with, hey, is this going to keep working? Like, wow, this is really off. So we'll continue to monitor. It's all about strength and weakness. It really is. We have an up bar. Was that a really strong up bar or was that a really weak up bar, right? We're looking inside the bars to determine strength and weakness. That is order flow in a nutshell. I personally do not care about potential trading activity. I don't care about where there's limit orders that are, large. I don't care about where, some of these different tools are that show you where there's passive liquidity resting. I don't care if there's what percent of the total book is bids versus offers. I don't care. I care about the transactions being made and who's most impatient, who's getting aggressive, and how does that fit within the overall context and narrative of what we're seeing. So that's what we're going to talk about today. Some people say it's trade flow, right? And that's just kind of a different way of talking about it because it's actual trades. I could say order flows, actual orders. So that's just kind of a play on words. But identifying strength and weakness, it is similar to strength and weakness of pure price action. What do we talk about in the price action section of this course as identifying a weakness in price action? What's one pattern? Flag. That's right, Nick. If we see a move like this and then a move like this, this is weak. And why is it weak? Well, it's literally, the angle. This is really weak. This would be even weaker. This would be really strong. This we might call normal for the current volatility or something like that, right? So it's all about the angle. Imagine that we've got like, this axis, right? 0 degrees, 90 degrees, right? So, 80 is going to be really strong. 45 might be normal, right? 30, 15, I don't know. I'm making up these numbers, but these are weak and super weak, right? And you just flip that for, the strength of an up move, strong, really weak, the angle. And what is the angle or the slope, either way of the movement? Well, it's about essentially how much y-axis we're gaining per unit of time or per unit of volume, right? Rise over run. Taking us back to pre-algebra or whatever it was in high school. It's a form of speed, isn't it? Like if you're going very steeply, typically that occurs pretty quickly. And let's not forget the force or the amplitude or the duration of the move, essentially. Might not be duration, but it's the length in either X or Y axis, typically Y axis in this case, right? So, this is maybe strong, but what about this, right? That's stronger because it went further. So, we could apply this to price action. We can apply this to how much order flow is being done per unit of time, how much aggressive order flow is being done, right? So we read it the same way, it's just different data sets. Okay, so before we start really diving into the concepts and whatnot, we'll talk about getting some charts set up and what we're going to use. 2 tools. Both are just very simply graphical representations of the time and sales data. Most of you probably read my blog post on you're not still using the time and sales, are you? ? And these are the tools that I recommend for people to use because it consolidates that information. It displays it graphically, historically. You don't have to remember what you saw whizzing by. And sure, if you did stare at the tape, the time and sales, actually, could you get maybe a slightly more granular view of the speed of the tape? Maybe. But typically, when the speed of the tape is high, you don't need any order flow tool to actually see that. I know I can see it by looking at a price action chart, right? It's up, down, up, down, up, down. It's moving quickly. The ticks are coming through quickly. You can tell that prices are changing quickly. The speed of the tape is high. I don't need to look at time and sales to see that. Same goes for the cumulative delta or footprint chart. So what are those? Cumulative delta, it's just an indicator we'll put in a pane. You all probably already know. It's below my main intraday chart. And it's simply a running tally of how much volume was traded at the ask minus how much volume was traded at the bid, right? So the more positive that end cumulative delta number is, the more buyers are being aggressive. So it goes up. We're lifting offers, volume at the ask, with less volume at the bid to subtract away from it. Therefore, the net aggressive order flow, the net cumulative delta, delta being difference between ask volume and bid volume. Cumulative just means it's a running tally rather than just maybe a bar by bar reading, which resets at 0 each bar, right? That's all it is. Instead of staring at the time and sales and seeing whether it's a red or blue line because it's at the bid or the ask, this is saying how much volume was if we had a sequence of events come through where we had 2 contracts trade down at the bid, and then 4 contracts trade at the ask, and then 2 contracts trade at the bid, and then 5 contracts trade at the ask. Well, the cumulative delta is going to be 4 plus 5, right? All the volume done at the ask minus 2 plus 2, right? So that's 9 minus 4. So we are plus 5 cumulative delta, right? And so as that continues to come through, it was 5, and so it was plus 5 on the chart, right, on an axis. And then the next bar, by the time it's said and done, we're at plus 10, so it's here, and it draws a line. And then a bunch of selling came in, and we were only plus 1 for the session, right? And then a bunch more selling came in, and we were minus 3 for the session. And it just plots where that is over time in a subpane. So we'll get you set up on a chart there shortly. In the footprint chart, it also shows the exact same data, but you pick a bar type. For example, we could pick a 1-minute bar chart. And for each 1 minute, right? So here's minute 1, here's minute 2. You have 2 columns for your bar chart. And for every single price level, right? Let's say there's like a couple different prices here. It's the S&P, so it's 33.48.50, 33.48.25, 33.48 even, and then 47.75, right? Well, as we trade those prices, let's say during the first 1 minute period, well, first we had I forget the numbers, 2 contracts at the bid right here when it was at 25 cents, and then 4 contracts at the ask. And let's say that the best bid and the ask drop down, right? And then we trade another 2 contracts into the bid lower, and then 4 contracts into the ask at the 25-cent level. And I forget what my other numbers were, right? But let's just say that we traded 10 contracts into the bid, which dropped, and then we traded 10 contracts up here, right? So you end up with, it'd be a 0 here and a 0 here. You end up with something that looks exactly like this. And then let's say 60 seconds is up. So boom, that bar is done, just like a normal 1-minute bar chart. And we started over here, 3 contracts and 0 and 15 and 275 and 5 and 0. It just shows you how much volume was traded at each price level, and it puts it in the left column if it was into the bids, and it puts it in the right-hand column if it was into the ask or the offer. And it just builds that up over time. And if we trade back up, to this price, whatever, and trade, 10 more contracts, this goes from 10 to a 20, right? It just updates until the time is up, and then it goes to the next one, and then this will never change again, right? So it just shows how much volume was traded at the bid and the ask at each price level for whatever periodicity you're looking at. Cumulative delta, it's going to match whatever it's an indicator to a chart, right? So it's going to match whatever periodicity your chart is. If you're looking at a 1-minute chart, it's going to show you the cumulative delta for each 1-minute period as it rolls along. A footprint chart, however, is a standalone chart. It's on its own, so you need to choose a periodicity and whatnot. So I think that's all I wanted to say. Let's set them up. We're going to apply, again, delta to our trading time frame chart, and the footprint is a standalone chart. So let's bring over this guy. Just had some old lines and stuff on here. All right, so let's just maybe scrunch these up. And we'll